Okay, so in this section, I'll be breaking down the statistical outcome of every trade and just the myth regarding this because there are many people that think if they're on a winning streak, that the next trade is most likely going to be green, while this is completely false and just a straight up myth that is just caused by emotions. All right. What we need to understand is the market does not care how many times you won in the past, how many times you lost. You are irrelevant to the market. You're literally irrelevant. I see people online talking about, you are liquidity. I am liquidity. You became liquidity. Sure, yeah, you could say you became liquidity, but you as a person itself, the market does not care, all right? So we need to understand that the market there's no relation between you and the market, okay? The market has no relation to you, but actually you could have a relation to the market. It is not a two-way relationship, okay? So every trade is an independent event with its own set of probabilities and outcomes. The market does not remember or care about previous trades. Each trade starts with a fresh set of conditions, meaning different setups, different take profits, different stop losses. The market is dynamic. It is not binary or black and white. Emotions are the only external factor changing from trade to trade and that influences decision making. So if you're on a winning streak, the only change that there really is that you are just a lot more confident in your trades. You might be maybe over leveraging a bit more, and that can cause you, I guess, to take better or worse trades. You're on an optimistic mindset. While on the other hand, if you're on a losing streak, people tend to go on a tilt and they force a lot of trades. They FOMO. They don't wait patiently. They want to make that money back, and that leads to a deeper red streak. So that's the reason why those streaks happen. The streaks don't happen because the market is being bad that week. I know a lot of people say this, but I would say it's almost BS. If it's bad that week, you shouldn't even be taking a trade. You shouldn't be taking a trade if it's not meeting your setup. So never blame the market, blame yourself. That's what I stick to. Now, emotional states such as fear, greed, or overconfidence, like I mentioned, can impact how a trader approaches and executes every trade. It is essential to separate emotions from the trade and base decisions solely on analysis, strategy, and risk management. Now, to summarize this section, by recognizing that each trade is independent, traders can approach each opportunity with a clear mindset and make rational decisions based on the present circumstances and new information. Emphasizing consistency in following a trading plan and managing risk can help mitigate the influence of emotions on individual trades. Like I mentioned, I'm a prime example of this. I'm basically almost emotionless at this point. I know my trading plan. I know I'm profitable in the long run. I know my risk. I know everything that comes to trading. I just execute and wait for my trade. That's it. For instance, just because you're on a winning streak doesn't mean the next trade is going to be more likely to end up as a win than if you're on a losing streak, vice versa. It's like rolling a dice. It's either heads or rolling, actually flipping a coin. It's heads or tails. Each one of these probabilities do not affect the next probability outcome. There's no difference. Another crucial part of trading is that the markets don't care where you enter and where you take profit. So it's up to you to make the wise decision based on technical confluences and new data. New data is very important on where to enter, where to put your stop loss, and when you should get out. Okay, so the market doesn't care where you put your entry, where your stop losses technically are. I mean, sure, yeah, these stop traders out before they come in your way, but if you know that, you would not put your stop loss there in the first place. So that's something you want to take into consideration. All the fault is not on the market, but rather you. Yes, there are times where a trade is a perfect setup, A+ setup, but you still get stopped out or you still lose a trade. That is just the nature of the market. The market is not 100% perfect. There's no 100% win rate strategy out there. So that's something you should be expecting. And that's why a good risk reward ratio and understanding your risk and just your trading system in general is so crucial. There's a lot more to trading than just entering, exiting. All right. So that's going to be it for this section. And let's move on to the next section.